The little red bond. Like me or just, or whatever. So, for those of you who I haven't met, I'm Charlie O'Donnell. I run Next NYC, and we'll tell you a little bit about where you are and our sponsors. But just to get a sense of who's in the audience, founders, great, yeah, obviously you guys, investors, okay. Out of the founder group, or anybody else, a couple sponsors, others. Out of the founders, who has gotten at least one check from any investor? Okay. Who would like checks from the one investor we haven't? Great. I think so. I think I only saw your hand go up. So don't all picture up us. So first of all, welcome to Fabric. Although to think our Fabric team members weren't at the AB, so I'll let her talk to you about how awesome this place is. We have a couple folks to thank. Colin from Foley Co-op is here. Colin, you want to tell us a little bit about what you do? Sure.
I'm co-chair of emerging companies and venture capital practice to the law firm. My name is Foley Co-op. It's the least marketable name on the planet. The only thing I've done for my 15, 17 years is represent founders, investors, but both founders. One year so. In transactions, exits, another deal. So thanks for being here.
Thank you. Colin recently attended our pre-Series A offsite and was just mentioning how he intended just to pop in for an hour and wound up spending the whole day. So I think that automatically puts him in the least transactional lawyer, because if I actually had to pay him for that whole day, I probably wouldn't be able to afford it. But we are also supported, the Fed series is supported by Row, banking platform. They're busy sponsoring a million other events, so I don't think we have a Row person here tonight, but we wouldn't be able to do it without them. And also Jackie from Sunset is here. I hope you never have to work with her. But Jackie, you can tell us what Sunset does.
Yeah, thanks, Carly. Everybody, the Sunset companies wind down. Really, the intention is not every founder exits, and you're going to focus on the fact that founders, they need a path forward. We help take on all operational, legal, tax complexities of winding down so that they can move on to what's next. And investors feel like a peace of mind, everything is being down in the correct way.
And one comment I'll make about that. We recently did a seminar with Sunset, and we're going to be doing one, I think next week, actually, about when things don't quite go the way you expect. And many times in the life of a startup, you feel like you're getting closer to that point of things not working out, and you recover from it. And so firms like Sunset have a lot of pattern matching that they can help you out with. And so if you, before you're down to your last dollar, and if you want to use them as a resource to say, hey, I want to get out ahead of this, and here's where we are, what have you seen? How have folks avoided this situation? Or we're going to be talking about trying to facilitate a sale before you get down to that last dollar. So it's not just, reach out to them if things are over. It's like connect with people who have gone through this before. So hopefully you can avoid it. But if you get down to that point, making it as easy as possible. Cool. Now that the AV is on, if we can get a couple of words from my team at Fabric. Do you want to come in and tell us about Fabric? Come on in. Who's been here before?
Hi, everyone. Welcome in. My name is Christy. I am the experience manager here at Fabric. If it is your first time, welcome in. If you're a returning, welcome back. We are a social space really designed to address the loneliness epidemic and people's desire to connect in real life. We have 2 locations here in Luggage, Tribeca, as well as one in Dumbo. And we are really here for community builders and seekers, creators, founders, entrepreneurs, etc. If you're interested in learning more about who we are and who we love to support, I will be here all evening. We're open till 9, or you can check us out at Join Fabric with a K.
Thank you. And actually, just out of curiosity, because I live in Brooklyn, who here would not have come to this if it was in Dublin? Oh, right? It's useful. I appreciate it. There are a handful of other people that didn't come to this because it was in the city. So, it works out either way. But that's good to know. Good to know. This panel is called How I Raised. And a lot of times I've seen founder success panels where, somebody raised a big round, exited, and you're there just starting out your process. And the part about getting that first round over was like, yeah, I had an idea. I talked to a couple investors and we closed our seed round and then we were off to the races. And I'm like, wait. There's like 18 questions I have about just that comment right there. And very rarely do you see people sort of go deep and tactical about how that happens. So I've invited 3 founders who have very different companies, who come at this from very different perspectives to share their raises. We're going to try and be as tactical as possible. I've already told them, try not to skip ahead. And I'll start off by having them introduce themselves. So I'll just start off with you. Don't know.
It's working. Yeah, I
Okay.
think so. Hi, I'm Aasiyah, the founder of Renatural. It's a hardware beauty startup.
Hello, everyone. My name is Alan Way. I'm the CEO and co-founder of a company called Humanitru. We are vertical SaaS and AI for mid-market enterprise nonprofits.
I'm Edmund. That's not working, is it? No, I'm quite loud though, so it's probably all right. I'm Edmund. I'm the founder of Superposition. We are building a better recruiter because humans suck at recruiting. I can say that because I was a recruiter for 7 years before I left the code.
Cool. So let's start off from the very beginning. And that is the idea stage and deciding that this is the idea that you are going to, because we're talking about investing and VCs get the opportunity to build a portfolio. They're going to pick 30 or 40 companies. You all decided this was the one you wanted to work on. And so how did you get to the point of this idea, your own personal flower? And we'll start with you.
So my company is around making wigs and hair extensions more realistic. I think it's more about connecting the dots. I don't think I would have chosen this for myself, but it just kept popping up in my life. I moved to Korea to work at a wig factory for my dissertation. Did a lot of research, made a lot of connections. I invented a product in 2020 called the Wig Fix, and did pretty well. We sold quite a few, and then thousands of people are asking us for more products in the space, and that's when we raised a venture to build out.
So you got pulled into the market, basically.
Yeah, and I really do like it personally.
A little bit by accident. The former co-founder had worked in the nonprofit industry in fundraising and always so I'm a child of immigrants, kind of always wanted to do good, give back, but also make money at the same time. And I remember sitting down with him after kind of failing at a startup idea in college and asking him, hey, can you show me the software that you're using? Found out how much they were paying for it and just thought it was a interestingly enough dilemma to keep me busy for a very long time.
Gotcha.
That is definitely working out, isn't it? Wow. Sorry, everyone. I messed around thinking about ideas that I thought would be interesting to build, and then kind of eventually, after too long, realized that I had to build something where I had an unfair advantage and unique insights. And I had literally done this job that we're now automating for 7 years, and the intersection of people who have the domain experience, but also believe it can be improved and that the status quo is too low a bar was really small. And so I think it was just that combination of insight from having done the job manually separately.
So we'll just start with you on this. It's just in particular, companies that automate and augment using AI, I feel like they can also sort of dog food some of their own stuff. And there's all this writing out there of, how few people you might need to start and launch a company. So I'm wondering at any point when you started out, would you say, I might not want or need any employees, and the idea of even deciding to raise, like, was that an actual conscious decision? And did you ever consider not raising for this?
I never considered not raising because I think it's going to be a land grab of winner takes most. Whether you have people or not, distribution is zero sum. But I did dog food product to find my co-founder. So I was a solo founder. And my co-founder, Lee, he's crack. He did what I said 4 years ago. He got a DM from me, except it wasn't from me. From the agent I built.
Assistant.
Yeah. And when we met up for coffee, I had to confess that I actually haven't written that message. But thankfully, he thought that was cool, not weird, which meant we were a good fit. But yeah, to your point, the idea of the 10-person unicorn is exactly why I wanted to build this, because when you're a 10-person unicorn, employee number 11 is the most high leverage decision you'll ever make. So being able to match on vibes and values, not just skills, is actually going to become incrementally much more important rather than less. And so it's fewer hires per company, but net new many more companies where every hire is really high impact.
What about you on the decision to raise?
So for us, we had a mixture of bootstraps, friends and family, rumbling start. For some context, we did not raise venture capital until we were about $1 million in revenue 7 years in. So it's a little bit atypical. So raising has always been we can spend this money to make this much more money.
Got it. And that 7-year period, did you attempt to raise at a different
Yeah,
point?
multiple failures, yes.
You were building hardware. Raising was not necessarily possible.
So we bootstrapped the company for the first few years to a few million, and then
With your other product.
with the other product, then we wanted to build out the new product, which required building out hardware. So that was the trigger for raising.
So I also want to shed some light on the rolling start, if you will, with the fundraise that doesn't quite go the way you intended. You spent, and I'm interested to hear how you think, you just publicly announced a larger seed round. But I even forget the timeline of we first met and somebody came in, but what was the timeline from when you first started contacting investors to closing what you would have called your pre-seed round? How long was that whole process?
Yeah, I remember.
Okay.
It was 16 months from end to end, which was painful. Yeah.
And the thing I'd be interested in sharing is I feel like you were and this happens to a lot of companies, you were very determined that you had the right product. You talked to a ton of investors. What were some of the signals that you should keep going on this raise? Because I'm actually the first person to, I've shared this a few times on LinkedIn, that I feel like some founders are out there too long, that they're not getting market feedback, that they need to pivot or change in some way. But I backed you, and I didn't feel that way. And I'm curious from your perspective, was there a point in which you thought investors just aren't going to get this, or there's something about this idea that is not backable, and what helped you persist?
No, I just think it's a really polarizing idea to build a wig robot. So it's people really love it, or they're just what the hell?
So
Strongly negative, audio response.
uh,
So it's kind of easy.
It's a shame. I met with a founder one time who, after going through his idea, I wound up meeting him again, and he was asking me about all of the different feedback that he was getting. And I said, I think the reason why you're getting all of this totally disconnected feedback is because your company is a 7. And what I mean by that is there's nothing I could tell you that was definitively wrong with your idea, but there's nothing I really loved about it either. So when I passed, I just kind of like picked a nitpicky thing. Well, it wasn't really something like he definitely like had a business. It was definitely going to be a business. It just wasn't one that I was excited to have. For those of you who I haven't met, I'm Charlie O'Donnell. I run Next NYC, and we'll tell you a little bit about where you are and our sponsors. But just to get a sense of who's in the audience, founders, great, yeah, obviously you guys, investors, okay. Out of the founder group, or anybody else, couple sponsors, others. Out of the founders, who has gotten at least one check from any investor? Okay. Who would like checks from the one investor we haven't heard? Great. I think so. I only saw your hand go up. So, don't all get your applause. So, first of all, welcome to Fabric. Although I think our Fabric team members weren't at the AB, so I'll let her talk to you about how awesome this place is. We have a couple folks to thank. Colin from Foley Co-op is here. Colin, you want to tell us a little bit about what you do?
Companies and folks and founders. Thanks for doing it.
Thank you. Colin recently attended our pre-Series A offsite and was just mentioning how he intended just to pop in for an hour and wound up spending the whole day. So I think that automatically puts him in the least transactional lawyer, because if I actually had to pay him for that whole day, I probably wouldn't be able to afford it. But we are also supported, the Fed series is supported by, they're busy sponsoring a million other events. So I don't think we have a person here tonight, but we wouldn't be able to do it without them. And also Jackie from Sunset is here. I hope you never have to work with her. But Jackie, you can tell us what Sunset does.
Thanks, Carly. Everybody, Sunset Cups COVID is one down. Really, the intention is not every founder exits, and they need to winding down so that they can move on to what's next, and investors feel like peace of mind and everything.
And one comment I'll make about that. We recently did a seminar with Sunset, and we're going to be doing one, I think next week, actually, about when things don't quite go the way you expect. Many times in the life of a startup, you feel like you're getting closer to that point of things not working out, and you recover from it. And so firms like Sunset have a lot of pattern matching that they can help you out with. And so before you're down to your last dollar, and if you want to use them as a resource to say, hey, I want to get out ahead of this, and here's where we are. What have you seen? How have folks avoided this situation? Or we're going to be to facilitate a sale before you get down to that last dollar. So it's not just reach out to them if things are over. It's like connect with people who have gone through this before. So hopefully you can avoid it. But if you get down to that point, making it as easy. Cool. Now that the AV is on, if we can get a couple of words from my team at Fabric. Do you want to come in and tell us about Fabric? Come on in. Who's been here before?
Hi, everyone. Welcome in. My name is Christy. I am the experience manager here at Fabric. If it is your first time, welcome in. If you're a returning, welcome back. We are a social space really designed to address the loneliness epidemic and people's desire to connect in real life. We have 2 locations here in Luggett, Tribeca, as well as one in Dumbo. And we are really here for community builders and seekers, creators, founders. If you're interested in learning more about who we are and who we love to support, I will be here all evening. We're open till 9, or you can check us out at Join Fabric.
Thank you. And actually, just out of curiosity, because I let have planned, who here would not have come to this if it was in Dublin? Oh, it's useful. I appreciate it. There are a handful of other people that didn't come to this because it was in the cities. you know, it works out either way. But that's good to know. This panel is called How I Raised. And a lot of times I've seen founder success panels where, you know, somebody raised a big round, exited, and, you know, you're there just starting out your process. The part about getting that first round over was like, yeah, I had an idea. I talked to a couple investors and we closed our seed round and then we were off to the races. And I'm like, wait. There's like 18 questions I have about just that comment right there. And very rarely do you see people sort of go deep and tactical about how that happened. So I've invited 3 founders who have very different companies who come at this from very different perspectives to share their raises. We're going to try to be as tactical as possible. I've already told them, like, try not to skip ahead. And I'll start off by having them introduce themselves. So I'll just start off with you. Dobra.
Yeah, I
Okay.
think so. Hi, I'm Aasiyah, the founder of the Renatural. It's a hardware beauty startup.
Everyone, my name is Alan Way. I'm the CEO and co-founder of a company called Humanitru. We are vertical SaaS and AI for mid-market enterprise nonprofits.
I'm Edmund. That's not working, is it? No, I'm quite loud though, so it's okay, right? I'm Edmund. I'm the founder of Superposition. We are building a better recruiter because humans suck at recruiting. I can say that because I was a recruiter for 7 years before I left the code.
So let's start off from the very beginning, and that is the idea stage and deciding that this is the idea that you are going to, because we're talking about investing and VCs get the opportunity to build a portfolio. They're going to pick 30 or 40 companies. You all decided this was the one you wanted to work on. So how did you get to the point of this idea, your own like personal bar? And we'll start with you.
So my company is around making wigs and hair extensions more realistic. I think it's more about connecting the dots. I don't think I would have chosen this for myself, but it just kept popping up in my life. I moved to Korea to work at a wig factory for my dissertation. Did a lot of research, made a lot of connections. I invented a product in 2020 called the Wig Fix, and did pretty well. We sold quite a few, and then thousands of people are asking us for like more products in the space. And that's when we raised a venture to build out.
So you got pulled into the market, basically.
Yeah, and I really do like it personally.
A little bit by accident. The former co-founder had worked in the nonprofit industry in fundraising and always kind of, so I'm a child of immigrants, kind of always wanted to do good, give back, but also make money at the same time. And I remember sitting down with him after kind of failing at a startup idea in college and asking him, hey, can you show me the software that you're using? Found out how much they were paying for it and just thought it was a interestingly enough dilemma to keep me busy for a very long time.
Oh, that is definitely working with Howard's now. Wow, sorry. I like messed around thinking about ideas that I thought would be interesting to build, and then kind of eventually, after too long, realized that I had built something where I had an unfair advantage and unique insights. And I had literally done this job that we're now automating for 7 years, and the intersection of people who have the domain experience but also believe it can be improved and that the status quo is too low a bar was really small. And so I think it was just that combination of insight from having done the job manually.
So I'm going to start with you on this. It's in particular, companies that automate and augment using AI, I feel like they can also sort of dog food some of their own stuff. And there's all this writing out there of, you know, how few people you might need to start and launch a company. So I'm wondering at any point when you started out, would you say, hey, I might not want or need any employees, and the idea of even deciding to raise, was that an actual like conscious decision? And did you ever consider like not raising for this?
I never consider not raising because I think it's going to be a land grab of winner takes most. Whether you have people or not, distribution is zero sum. But I did dog food product to find my co-founder. So I was a solo founder. And my co-founder, Lee, was crack. You know, I did what I said 4 years ago. He got a DM from me, except it wasn't from me. From the agent I built.
The system.
Yeah. And when we met up for coffee, I had to confess that I actually hadn't written that message. But thankfully, he thought that was cool, not weird. which meant we were a good fit. But yeah, to your point, the idea of the like 10-person unicorn is exactly why I wanted to build this, because when you're a 10-person unicorn, employee number 11 is the most high leverage decision you'll ever make. So being able to match on vibes and values, not just skills, is actually going to become incrementally much more important rather than less. And so it's fewer hires per company, but net new many more companies where every hire is really high.
What about you on the decision to raise?
So for us, we had a mixture of bootstraps, friends and family, rumbling start. For some context, we did not raise venture capital until we were about $1 million in revenue 7 years in. So it's a little bit atypical. So raising has always been we can spend this money to make this much more money.
Got it. And that 7-year period, did you attempt to raise
Yeah, multiple.
you were building hardware. Raising was not necessarily possible.
Yeah, so we bootstrapped the company for the first few years to a few million, and then
With your other product.
with the other product, then we wanted to build out the new product, which required building out hardware. So that was the trigger for raising.
So I also want to shed some light on the rolling start, if you will, with the fundraise that doesn't quite go the way you intended. You spent, and I'm interested to hear how you think, because you just publicly announced a larger seed round, but I even forget the timeline of we first met and somebody came in, but what was the timeline from when you first started contacting investors to closing what you would have called your pre-seed round? How long was that whole process?
Remember, it was 16 months from like end to end, which was painful.
And the thing I'd be interested in sharing is I feel like you were very, and this happens to a lot of companies, you were very determined that you had the right product. You talked to a ton of investors. What were some of the signals that you should keep going on this raise? Because I'm actually the first person to, I've shared this a few times on LinkedIn, that I feel like some founders are out there too long, that they're not getting market feedback, that they need to pivot or change in some way. But I backed you and I didn't feel that way. And I'm curious from your perspective, was there a point in which you thought investors just aren't going to get this? Or there's something about this idea that is like not backable, and what helped you persist?
I just think it's a really polarizing idea to build a wig robot. So it's people really love it, or they're just like, what the hell?
So strong responses.
Strongly negative, like, or no response.
Uh-huh.
So it was like kind of easy.
It's a shame. I met with a founder one time who, after going through his idea, I wound up meeting him again, and he was asking me about all of the different feedback that he was getting. And I said, I think the reason why you're getting all of this totally disconnected feedback is because your company is a 7. And what I mean by that is there's nothing I could tell you that was definitively wrong with your idea, but there's nothing I really loved about it either. So when I passed, I just kind of like picked a nitpicky thing. Like, wasn't really something like he definitely like had a business. It was definitely going to be a business. It just wasn't one that I was excited to have portfolio. And I think that that's what other VCs were doing as well, where they're just picking like whatever they happen to think was the worst thing about this company, which frankly like wasn't even really that bad, to be honest. So he's getting this like all over the board feedback. But you were getting some like hard yeses and hard no's. And I guess the hard yeses were enough to keep you going forward. Did you close as you got those yeses, or was it like 16 months of no funding and then you?
Oh, it was like rolling like 100, 300, some grants as well.
Cool. Tell me about the fits and starts on the raise and the bootstrapping, and at what points did you decide it was worth trying, and then how long did you let it go before you're like, actually, you know what, I'm just going to go post more customers?
We time blocks to 45 to 60 days to run as tight of a fundraising process as humanly possible. Yeah, it's always going to be a distraction. Fundraising is always going to be a distraction. I told myself if you're not getting real signs of traction, we can talk about those signals later. In 45 days, go back to the business and work on something else. Importantly, just revenue for us. So we've tried that multiple times throughout the years, and then I guess the last time.
Think about the timing of your raise. I think, given that your company has AI in it, everybody here just assumes you just like email 3 investors and they're just like, how much can I possibly write? And it's just that easy, right? If it was that actually, I don't know.
No,
It's okay. I guess the challenge is a little different
Forget the meeting. It's not forget it.
because you have to differentiate from everybody else who's attempting to. So you have like sort of a different problem, right? Like no lack of investor interest in the space, but now you have to tell them you were doing something different.
Yeah. I think when you're raising, you have to solve one or two problems. You have to either convince them that your problem is the problem, or convince them that you're going to solve something that they definitely already think is. And we are very much in that second group. I love recruiters that no one ever. So like clearly it's an unsolved problem. Our timescale was we did an accelerator here in the city, made it works. Demo day for their most recent batch tonight. I just came from that. So anyone who's super early, accelerator curious, come talk to me. It was 8 weeks from our first meeting to closing. 92 meetings, 92 firms, multiple meetings, 20% conversion from first to second. So that is to give you an idea of the numbers, like the whole process. Traction just increases the caliber of folks that convert from a first to a second. It doesn't mean you get to do fewer meetings. And so like, you're not hot shit if you have revenue. I think we're like a bit naive, like, well, yeah, we have like 20K MOR. We launched the company 3 weeks ago, so this is going to be easy. It was not easy. And yeah, I think what we experienced most with this like reverse FOMO of like, why would I bet this early when there's 10,000 companies doing this? I'll just wait a bit and pick from, I don't know, the thousands at the next round. And so I think finding storytelling as to why we had like contrarian and unique and correct insight and like everyone else was wrong. Like the moment we started shit talking specific competitors, everything went so long.
But that model is specific to that space, right? And I think this is the thing that people have to sort of keep in mind is that, you know, if you are talking to investors that are likely to see all of the other AI driven recruiting tools and all of that sort of stuff, whereas I would imagine that most of the investors that look like me didn't know all the other wig companies, specifically me, but like didn't know all the other wig companies in the space and didn't really know that much about your space. So let's talk about that as sort of a different challenge, right? Because from investors being convinced that the space was something that they should invest in, how did you have to overcome the, like, this is a space that I've never thought of? Because I would imagine that or how would you describe the mix of investors? I feel like it's maybe half and half of people who know your space well and people who wouldn't have.
Say it's like 1090.
1090.
So like, you to, well, from my perspective, I think that they just believe that like I'm the best person to build it because I know a lot about it and they like dug into it and seen my name pop up probably. But I think it's more of like, this is a big space. This is a really eager founder rather than I study the space deeply and I see an opportunity and this looks like a good company to solve that problem.
You probably know this off topic. You remember how many investors were in your funnel total?
For the seed round?
No, just the first, the rolling start that was all of the individual.
For the pre-seed, it was like
103. And how many of those turned into second?
I think less than 30%.
Okay.
Yeah.
And of those 30%, how many wound up closing? How many people are on the cap table from that initial pre-seed round?
12.
So it's like 260, 12. Cool. What do your numbers look like?
Targeting 172, 100 had some type of connection. 20 actually got the first meeting, less than 10 did a second. 4 invested.
20 total got to first meeting out of 100. Was that because of the space? Let's talk about the space. Convincing people that the space is an issue.
Yeah, I feel like that's something I could write hours and hours of thesis on. We sell to an industry that in this very name is called nonprofit. And it's not only a space where people may not even know much about it, it's a space that many people have preconceived notions about it, right? You notice probably in the early pitch, I said mid-market to enterprise, and that's trained after years of people conflating to be like, oh, my local Girl Scout troop, right? That's who you sell to. So definitely have picked up a lot of tricks about how to talk about markets and how to either lean into biases or be contrarian towards them.
And so people don't even understand who the players are in that space, and things like the American, Cancer Society or something. That's a fairly decent sized company and has a lot of people working for it, spends a lot of money in overhead, which they wouldn't necessarily be sure of. I'm actually interested also in the recruiting side, because whilst VCs feel like recruiting is a problem, I feel like recruiting startups have not necessarily fared. I mean, basically aside from LinkedIn, there haven't been a ton of very large exits in this space. Did that come up in conversation?
Yeah, absolutely. Like the private equity carpet is littered with the bodies and carcasses of all these two-sided marketplaces in the 2010s that all failed. And so we found that people who like build themselves as like HR tech investors were functionally useless because they all had scar tissue, and they were like dead behind the eyes, and they genuinely become a therapy session when they were like, oh, we invested in insert some random ATS here that is now worth. What we found was really effective was folks who had a thesis in something like slightly orthogonal. So if you'd written a check into an AI SDR but hadn't made a bet in a recruitment, that was a really good conversation. So we could talk about how it's similar, but also about how it's different. Similarly, if you had a thesis on voice as an input, and if you bet on like AI lawyers, like not halving, but like something that literally is the lawyer, or like an AI accountant that is literally the accountant. So that's where we actually found the most impact. And again, is they didn't have any competitive bets. The definition of what is competitive in our space could get pretty broad. And so that was what we found really effective. What's like slightly orthogonal, how you target folks that are checked into those things and they get intros there, rather than go after people who literally bet on like HR tech or our literal domain.
One of the things that came up, I was interviewing the founder of Braze, which used to be called That Boy. He was mentioning that he was far too early to his market. There were times where like he didn't necessarily have the traction to sort of legitimately raise that next round. But he found investors who had bet on similar things in prior cycles that had like good but not great exits, who felt like they wanted another shot at going after sort of similar ideas and understanding like the history of things that happened in that space. So I see that. Like, have you done anything like this? It feels like that's a lot of research work to sort of poke around somebody's portfolio and try and figure out what the bet was. How did you go about doing it?
So our customers are founders. So that was a great source of intro, because we sell to other startups. We don't sell to recruiters. We're building the recruiter. So our customers are typically pre-seed, seed, Series A founders. Obviously, anyone who's hiring, come talk to me. But we found that plus intros from other folks who've done the same accelerator was the most effective. And also, we didn't outbound any VCs, but I did outbound other founders. Like the conversion rate of founders willing to have a chat with you for 15 minutes about what you're building. If you do a targeted message like, hey, we've about to get a term sheet. What's it like having firm XYZ on the cap table? I now reciprocate. I do the inverse, right? Like founders DMB. We found that much more, but we didn't actually do any direct outbound to VCs, but outbound to founders as a route into VCs. Pretty effective.
Were there the signals that are not like VCs that were sort of nonprofit friendly, or did you look for people who had done anything? Or
also the scar tissue impact investors are actually also terrible for us. A lot of them are also more focused on like direct impact. It's like a thesis, right? And understanding what their thesis to their LPs are and how you fit within that is an important step of qualification. I do think that's homework you can do on yourself before you approach a VC to get that.
what are some of the signals of the people that like wound up converting? If you sort of look through everybody that you talk to, everybody that you would have imagined getting close, or that at least in their marketing that you would be a good fit for, that match who actually converted, and like what was common to the people who converted?
Yes, that was interesting because I thought beauty beauty investors and then hardware investors would be interested, and both of them weren't. I think that's one of the worst converting. And then the people that were interested were like generalists that have invested in like general consumer companies that have done really well and scaled fast. Yes, that makes.
And I remember, and I want to ask this question delicately. You also had a few instances of investors showing interest in spending a lot of time with you and not like getting to the finish line. And some and one that I think actually committed and just kind of disappeared on you. And so I'd be curious about like your time spent in the funnel and the folks that actually converted. Is there any rhyme or reason to like who got to a yes quickly versus who like you might have overspent time with? And what advice would you give founders around like just like managing the time that you spent with people?
If they want anything with like a third or fourth meeting for a pre-seed round, not a good sign. Usually, I would check if they actually have money. That was the biggest difference between pre-seed and seed. I spoke to people who I knew they were like in the middle of their funds or like early on in their funds.
And were there any like signals other than like taking meetings that you want to gone back and push with people to like if they actually are interested, like what questions might you have asked in hindsight?
Like when was the last investment you made? Yeah, just that general question. And a lot of people, this happened like a couple of times where they would kind of use you as a research base and go and invest in another company that has already raised more than you in the space. So I'd just be like more diligent. I think with the pre-seed, I was just super like naive. I was just like, they're interested. They're just using you for like research.
Interested is probably the worst word that you can get from a VC because they're always interested. Like in theory, right? Like if a VC actually says, I'm literally not interested in you, that's like, that rarely happens because there's always some chance that you could pivot, figure something out. Benchmark comes along and offers to raise a seed or whatever. So it's like interested is code for like, I'll hang around the rim because you're not a complete lunatic, but I'm not writing a check right now. So if you can push people off of interested, I think that's positive. So let's talk about the actual like raise and the amounts and all that sort of stuff. How did you decide like what was the milestone that you were trying to reach and how much was appropriate and how much to ask for? What do we start off with?
So with this recent round, we're like the 95% done with the product. The hardware was like finalized and I was like, I need to go to market and I would really like some money to do that. So that was like the trigger point, definitely. And then we aim to raise 4 million and we raised 4.2.
What was the 4? Like, why not 3 and why not 5? What were you trying to get to 4?
And because I really needed to. And then everything just takes twice as long and cost twice as much. So I wanted like a huge buffer.
Especially
in hardware. And I wanted to hire like our technical team in house as well. And I need the variation for that at the time and like the people and the investment into that would be extensive.
So it was driven by like a fairly specific model and headcount and things that had like real costs attached to them. What about you guys?
18 months runway, some sense of Series A milestone, either being able to raise or profitability was what we were running our financial model on.
Given that you had gotten to, you said $1 million of revenue, why still raise at that point? And it's interesting that you like get to Series A, get to $1 million revenue on your own. And I guess you're giving yourself optionality, but you're thinking of like Series A milestones because you were able to get to it this far. So why continue on that road?
Because we can go faster. Yeah, that was what drove into the business. My personality can be impatient. If it's like, I can spend 6 months doing this or I can spend 3 months. So and we knew the inputs and outputs.
And faster for you means what? More salespeople, more marketing dollars, more product, all of the above.
All the strategic things. Yeah. Like tech partnerships, specific product feature builds, go-to-market strategies. Yeah. Things that we've done small scale experiments and we wanted to try scaling them.
And what was the size that you wound up targeting? And was that what you
So our round was authorized for 3.5. We ended up on 3. Minimum for us was 2.5.
What about you?
So we set out to raise 1.5. We raised 1.6. We launched in May. We closed around in July. The trigger was, so we're selling an agent that actually does the work. The majority of people are just selling tools for people to do work. And so our trigger was fill a role where the agent has made all the decisions itself. Not that it's like I'm still allowed to be doing janky bullshit, like running a script and Edmund downloads some CSV and does some bullshit. But like it had to be like the agent demonstrably is reasoning and deciding who the right candidate to headhunt is and fill the role. And then we did 2 of those in quick succession, and that was then the trigger to go out and raise.
And why not 3 or somewhere, because I could imagine a script where you take that and you say, hey, our AI has filled roles. And you go to Andreessen and ask for 10 or something. Like, why not do that?
So we do believe it's going to be zero sum, be a land grab, but we also want to accumulate a good and distributed spread of investors at every stage as we grow. Because VC is actually one of our distribution channels. Because founders complain to their investors about hiring is hard. And we are going to be sexually judicious about our own hiring because we're dog fooding the product. No one buys a sign from a sign store with a shitty sign out front. So like, we have to hire exceptionally good people, but be really judicious about it. And so we basically wanted to raise enough to like have uncapped budget to hire 2 world-class people. And that is like $1 million each rather than 10. To then like build a base of customers that absolutely love it, to then go raise again when the time makes sense for the next round.
One thing I skipped over, and I wrote about this today, so I'm actually curious about this for you guys. Before you started this company, how would you rate your connectedness to the VC ecosystem? And what advice would you give founders for breaking in or lighting up the connections that you have in your networks? So where were you before you started it?
Like a generous 1, maybe. I mean, immigrant Europeans are not risk tolerant and you don't have disposable income. So like a friends and family round is not an option when you're trying to pay US overheads with European money. I worked in tech. I was a PM after I was a recruiter, but I worked for a fully global company. And so once you're fully global, like you don't have colleagues with you in New York there, elsewhere in the world. I mean, this is not very helpful, but just like get into a good accelerator. It's like the only thing I can say that BetaWorks has 2% acceptance rate. A quirk of BetaWorks is that they do a syndicate. So like when you invest, you get some institutional money for free. Like we have like True and Slack on a cap table. And that network was really like self-sustaining. There's a flywheel there, but you still have to be proactive. But going out to other founders that are affiliated with something, and maybe if it's not accelerator, it's like your school or like they're from the same countries, you're just something to get like a network of like founders are like disproportionately receptive to introducing other founders to VC.
And given that you weren't necessarily connected, I'm curious because there are a lot of accelerators and like, I know BetaWorks and I know their quality, but like, how did you know and how did you vet? Because every accelerator on the website like looks impressive. They talk about the companies and all that sort of stuff. Did you actually vet or did you get lucky that like that they'd have to be a good one?
I'd say there's the only serious accelerators are the ones that give you $500,000 or more. And that we put the list down to about 8, and they're probably all good from there. And if you get into more than one of those, then debate about it. But we didn't. We got into one, so we did that one.
And that's an interesting premise because if they truly are sources of really great companies, you'd imagine that they have enough backers themselves to write bigger, more competitive checks.
And it's conviction at like super early stages. And it's a self-fulfilling prophecy. So I think, yeah, like money is the easiest differentiator when you're looking at it.
We've done a startup in college. I don't know if that was,
Yeah,
or got into the ecosystem at all.
absolutely not. In fact, I probably say the opposite. I tried to build a wheat grow box in college. A reason at my university told me they would not condone anything like that. I'll throw one out there. We got all of our terms. So we had 3 term sheet. We got them all through cold outbound. I just sent so many emails and I showed up. So it could happen. I promise.
Why do you think your cold outbound worked when people are told that it doesn't? And maybe it's not true that it doesn't work. Like what went into the cold down?
There's, I think, a lot I can tactically say that should be the bare minimum, right? Like do your research, look at the portfolio. My eyes are glazing over looking at portfolio logos at this point. To be honest, I don't know if the tailored outreach actually worked for people. You don't know, but you know, hit shots you don't take. So associates, partners, head of platform, everybody there. Some I would try tailoring, some I wouldn't. The two things that kept me sane were because like trying to think of like tactical were like time boxing, right? Because I said if you run as hard as you can for 45 days and nothing happens and nobody responds, it's not your fault. It's the market, right? So that helped me like not swirl out about researching, you know, what VC and looking at their alma mater and like crafting a message about they like fishing. So I'm going to talk about fly fishing with them in my email. That's like 10 minutes down the drain and they could be, I don't know, in Bermuda and never see the email. That helped me be like, if I can go to sleep feeling like I ran hard for 45 days and nothing happened, it's the market, go back to running the business.
The other thing I'll say about the statistics, there are some statistics about the results of the venture process that imply causality, whether it isn't, right? Like if every single time you go to an event, people say, try and get more intros, then very few people, much less than you would think, are cold emailing. And so if you ask a VC where are your sources of deals that you've gotten done, and only 5 to 10% of them are through cold emails, you think, oh, that must be a shitty way to get a VC. But if everyone else thinks that cold emails are bad, then few people are doing it, actually. And instead, they're getting these like really mediocre warm intros that like, I just find like the whole warm intro process to be a big waste of a lot of people's time. It'll be like some random product manager that I know from a portfolio company. Go like with this company, like I wouldn't back you to be a VC. So I don't know what, like all I've learned is that this person can sit down and act like a reasonable human being in a meeting and you pass them on. That is not a predictor at all, but it like you spent an hour, they spent an hour, you probably commuted to where that to coffee and just a whole lot of time just to get into my inbox, which isn't necessarily a great signal. You also mentioned like analyst partners and people get told a lot about what levels of people you have to reach out to. The people that wound up closing and getting further in that process, that 20, were they like consistently decision makers? Were there like analysts that actually like ran it up the chain? Is there any sort of rhyme or reason to like who actually got those emails for the ones that actually closed and made it over the line?
Second meetings were predominantly partners and principals, although the ones that gave term sheets were all actually associates.
His first meeting was an associate.
Meeting and second meeting was associate. Oh, actually, the first meeting was associate, and then 30 minutes later, they got a partner on the call.
What signals led you to like, if everybody here is talking associates, how did they know to talk about it? They're talking to an associate who could actually get something.
Because you can tell the associates worried about their job.
Tell me more about that.
Like the associates that I talked to that like ran it up the chain and got a partner meeting, I got the sense that like, oh, almost as much as I need them. Like they need me to go to their boss. Like they're prepping me on how to talk to their boss, right? Like I got a sense of, oh, they as well. Like
as opposed to associates that are just like filling out a database for something.
That's for a data room. They're filling a quota of memos they need to write. They don't want to get on the call because just send me your information, right? Like,
they're in a cushy position where they know they're out in 2 years and they're not like, gotcha. What about your connectedness in the venture ecosystem before you started?
From the UK, so very, very little. My business did get some attention from a few funds, but the deals were like awful, like embarrassingly awful, like 40% of your company for £200,000. And then just being helpful to like random people online, and then they have them to BBCs. Like that's how I met Aubrey. And cold outreach. And then I think with cold outreach, my conversion was super low, but then you kind of follow up within 3 and 6 months and you actually build the thing you say you were going to build. And then it shot up to like 60, 70% replies. And you'd be surprised at who actually replies to you. Yeah, still in touch with like some of those people today.
Yeah, I think the consistency too, like we live in this sort of Shark Tank-ish world where you get like one shot to pitch somebody, and who knows what is going on, or they may see 3 other companies like yours, and you send that follow-up email and you're like, oh, that's right, like I saw you a couple months ago and I thought about the space a couple of times since then. And so the consistency of follow-up, I think, is important. The one thing that I would say is, personally, I didn't love the generic now you're on a newsletter follow-up emails, and I'd be curious about, like, if you were doing follow-ups, like, was it now you're on my investor newsletter, or was it like specific to that person?
Specific.
I'm so bad at follow-ups. I'll remember I'll label them, but no, I don't have follow-ups.
Any
Yeah, very much a newsletter. It also has a loom because I'm much better at talking than writing. So you could unsubscribe if you don't like it. But it's it is super transparent and detailed though. Like runway, burn rate, everyone, even if you're just on the friends version. I don't want to have like different layers of transparency. I just think everyone should get the same one. But I do have like focus replying to it. I don't know, it's some intro to a customer or like questions about it. So it has proven value.
I want to have one more set of questions, and then I want to get to audience questions. The actual close process, and like getting people from yes to like money in the bank. Are there any pitfalls or things that happened, or like from that initial yes, how did you like actually wrangle people, or things that you would have done differently?
I probably would have closed like earlier in summer, because in August it's like some of my investors were like on a holiday and just wouldn't sign the document because they were like offline. I was like the biggest pain point. I was surprised that was a pain point, but
Is that U.S. investments?
US investors, yeah. And then how long it would take. Like there's a lot of back and forth with legal diligence. Nothing bad per se. It was just a lot of documents to get through. And we only had like less than 15 safes. So it wasn't like too complex. And yeah, so I was surprised that it took like a month and a half.
2 things for us. We had 3 rounds of convertible notes that were also converting into price rounds. So the takeaway for me was take the initial diligence request super, super seriously. Because every back and forth takes time. And then over winter, no one's responding. So that was the first one. And then the second one was differentiating between the follow-on interest. Something I wish I would have done better was, and this is like a piece of tactical part that I really like, which is understanding their process for investing. Like, so when you're differentiating for those that want to follow on, is the holdup because they aren't, they're kind of interested, but they're not ever going to actually write a check, or is it because their lawyer's out of town, right? Like one you can work with, the other one you can't. Yeah, I think I failed to understand how quickly it can move when it's quick at the end, that you can scare other people off by a bit too fast. Like if I'm talking about installing urgency, you can actually attempt to install too much urgency and people just go, fuck it, I'll wait till the next one. And so like we had a couple of like a mad scramble of like potential other leads at the end. And like we'd super chuffed with the lead we got, but obviously an auction's always better than not an auction. And so like there's a mad scramble that just ended up like right at the end of the bunch of other folks trying to come in. And in the end, we're just like a bird in the hand as well. Oh, we don't want to mess it up. Then everyone else gets another shot of this for the next round. And so the tactical advice I would have is like, you don't have to go like, this is about to close, move really fucking fast. You could actually like just go like, oh yeah, things are seeming pretty good, or maybe sandbag it 1 step earlier than it really is. If you've got other folks seeing high intent, it might could only be a lead or not, but it is kind of a zero-sum choice between them. And like mechanically as well, sometimes your investor and you have the same lawyer, and there's a conflict, and there's a bunch of random other bullshit of having to use sort of sub lawyers, and it gets quite expensive.
Speaking of lawyers, I can put you on the spot about closing, and just actually like when you are gathering interest and somebody says yes and it looks like a round is coming together. At what point, do I like email you if you're my lawyer and say, hey, I think this is real? And then what are some of the things that I should just like have in order to not make this process like unnecessarily complex when you do the due diligence?
So good questions. Better. I know you're hesitant on costs, and side can save like a lot of little bumpy conversations down the road, and cheaper for you and cheaper, both on the law firm side and like the relationship side with your investors. And we are very mindful of your investment when you're I think in terms of organization, this sounds simple and stupid. Have a signature for every safe and every convertible note you have. Like start rounding that up. Try to do that without lawyers. You don't want Ben, where are you? I'm here. You don't want him at $4 an hour asking your investors for signature pages.
Yeah, you don't want my email undated safe, unsigned safe. That is just $250.
And also touching base with especially your larger convertible investors, whether or not they're participating, just to keep them sort of close. I am shocked that you closed a round in August with East Coast investors. I mean, that is like not the time that anything gets done. So yeah, and be mindful of that. Like, get ahead of whether it's winter, you got Thanksgiving, everything sort of slows down. Maybe think about holding off those conversations for chat writing and things up.
One thing I say about timing too is taking a contrarian approach to meetings. I think is good. Like sometimes it's tough to close, but I remember like I used to go out to the West Coast once a quarter, like a while back, to connect with other VCs. And one year in the fourth quarter, I just like didn't get to it, and I was like, oh, I guess I'm gonna miss it. Christmas was like on a Saturday, and I was like, you know what? Why don't I go out there Monday through Wednesday of like the week where Christmas is the Saturday? Because everyone takes off the week after, and everybody was in the office in those days, but no one had any meetings on their calendar whatsoever. Because who the hell would pitch a VC the week of Christmas on the Saturday, except their calendar? I went 12 for 12 in scheduling VC meetings like back to back, Monday, Tuesday. I didn't even need to take any on Wednesday because I got like all the meetings I wanted to get done. They had completely empty calendars that week. Now, the challenge is, do they remember you from, but at the same time, like if everyone's going to pitch January 2nd, you could probably actually get a meeting scheduled before anybody else does. If you pitch on December 21st and then immediately follow up saying like, I know it's a busy time. We just get a meeting on the calendar for the first week. We'll probably be the first meeting scheduled because you've already met with them. So you might not be able to close, like we can sort of be, a little bit prepared. I'd love to take questions from the audience. Jump in.
So I think something that's super interesting that everyone talks about is like getting to know investors before you raise a round. And also we spoke about that before, like not saying that you're raising a round. How are you thinking about like, or if you would redo your fundraisings, or if you do the next one, sort of getting to know investors instead of just doing like 170 outbound emails and day one and then 45 days trying to get to know them, but like getting to know investors over time, or if it's they will remember you anyway. So why does it matter?
Sure. Are you guys like in VC pickleball leagues, or what is the actual like getting to know you process while you're trying to run this company?
So for my most recent round, we closed in like 38 days, and I didn't know anyone beforehand, but like they were all warm interest from my incumbent investors. So if people, like I built a relationship with those people, and they obviously that resonated with like the new people. So I think building relationships with people that are like already in your corner. And then for the pre-seed round, just being helpful. So we aren't necessarily friends, but I remember when someone asked for like a contact to like the British Embassy, and I knew someone. They were super grateful, invited me to some like email founded dinner, met a ton of people. Still not friends, but like it was helpful to like meet people. So I think just being helpful rather than like being friendly. Or that sounds manipulative, but you know what I mean? Yeah.
Also, just as a follow-up, like engaging whatever existing you might already have on your cap table. Like as a first check investor and not from a large fund, sometimes where, I'll put in, I'll say I want to engage and helpful. And if it's like somebody else is the bigger check, I just won't hear from them ever. I think early on in our relationship, I was like, I think we had to figure out our like cadence and how meetings go, the random ask questions that I would ask, and you try to figure out like what does the guy even want and all this sort of stuff. And but now we still talk on a regular basis, and we have like, you know, it's like the same document that it's based on, and we have a routine, whatever. And I feel pretty informed about what's going on, and so that's only going to increase my willingness to be helpful versus like some angel investor who writes a check, your head's down for 2 years, and they just like legitimately haven't heard from you at all in that period, and like that is a missed opportunity, I think.
I'll be contrarian if that's okay. So part of the bias that I have for like the time box is because I've been burnt by like long time relationships with VCs who say a little interested in like 4 years past by or whatever it is. They're never going to invest. I think fundraising is but one component of running a company. Every minute spent creating a relationship with a VC is also a minute spent not creating a relationship with a client, with a customer, with a partner. It's a trade-off, right? And what we wanted to optimize for was I knew how to run a business and how to grow it. And I wanted to run a quick process because the VCs that I was chatting with, they were also running their business, right? And yes, a relationship building is for de-risking, and that's important, but there's other ways to de-risk. And my strategy was to focus on knowing my business so that we could de-risk it together quickly.
Unless you have something to about, I want to try to get to the questions. Okay, cool. Go ahead.
My question, and I'm sorry for listening out to Aasiyah. Yeah, sorry about that. That's okay. It's a twofold question for both of you and Charlie. So Charlie, you're invested, right? So I know very well your thesis if you're not raising, get out of the game. And 16 months was exactly like really against what you preach. Like if you're not getting money, stop raising. And
But I had closed.
when did you? I was gonna say, when did you go in?
We tried to get a minimum, right? Like,
yeah, the minimum was 750, and that was like within the first 4 months of you saying, like I think,
Yeah.
committing. And then so we got that, and then it was kind of like a rolling close because people were like,
yeah, it wasn't 16 months to get from zero to the whole thing. It's like we had just set a reasonable because so I started a company in 2007, and I tried to raise in October of 2008, like the week that Lehman went under. And so I was like literally in the valley, and I'm sitting across the table from a VC, and they're sitting there going to me like, "Are you still watching the market? It's a flip." I was like, "Yeah, I don't actually have any money, so I don't." Like, it's really sad for you that your $20 million is now 16. That must be really terrible. But like, so I always think about like, I'm not willing to write a check unless if a bank disappeared tomorrow and the venture fundraising market like disappeared for the next 9 to 12 months, we can get something accomplished. So that was why I wanted to set up like a minimum, let's try and raise at least 750 before I commit. And that wasn't that.
Yeah, that's what I'm asking. And then register hit a follow up on the time boxing and then decided not to raise. So you're going more for 45 days, 60 days, and then it didn't work. So then how many times did you said a couple of times? 3 times. So were you at all concerned with how that would appear to people that you're raising, then you're not raising, you're raising, then you're not raising? Because there is a little bit of consistency of.
But you're making progress that whole time.
Sure. And at the end of the day, it's always optics, right? Like kind of Charlie said, 7 out of 10, everybody will always find a reason for it. I mean, that's also why some of the longer term relationships we didn't focus too much on because we knew we had a narrative. And I'm not going to swim upstream and beat that.
What were the approximate, like, when you went out to raise 3 times? Why do you think this time worked versus the other time? Because it was like, was it the amount of revenue that you had gotten to? Was it something about the market, or is it just, VCs are weird? That's unacceptable.
Yeah, it's like, that's really hard.
Or you got better at telling the story, maybe, or maybe something.
I hate to cop out and say all of the above. VC markets kind of went a little weird in 21, 22. Our space also went up and down a little bit. I got better as a founder. We had more revenue. It probably is all of those. Yeah, it's hard.
Okay. Any other questions? Go ahead.
aside from the fact that they were willing to give you cash, what other like criteria did you have to evaluate when you wanted these people or these firms on your cap table, and what kind of questions did you ask them to kind of figure that out?
How many leads they send us? It's very straightforward. We stack count them by how many, because we sell startups. And so we have a notion doc where we have how many leads they sent us. And if you cross a certain threshold, then we like you. It's really that simple. And in our case, it is bi-directional, right? Because like we find better folks for their portfolio companies, the writing guide, lifts or boats, everyone's happy. Interestingly, we found, and because of this, like you're saying, like you don't want to waste time talking to folks. The exception is if you sell to startups, because then it's not just a fundraising meeting, it's a partnership meeting. They're the reseller, basically. And so we actually found that if you liked us, you sent us leads because you want to curry favor with us. If you were skeptical about us, you also sent us leads because you don't trust that it actually works. And so there's that like bi-directional like leads. But that's the it's leads distribution channel. To that like investor relationship point, like earlier saying, my co-founder met one of the investors. My co-founder installed code for him, like set up his like personal life to like have our agent through his inbox and stuff. So it's like there's a difference between building a relationship with someone who's not going to write your check versus doubling down on a relationship someone already has. It's like bimodal.
By the way, I think it's interesting that introduction as a signal of interest. Like the part of my book that I wrote about this, and I think that also works not just with investors, just like even people in your life. Most of the people you know are not your target customers, right? And so a lot of times you come up with a startup idea and everyone's like super excited for you. And they say it sounds great, but somebody's willingness to reach into their network and make an introduction actually costs them something in terms of social capital. And if you're not getting intros from your network to like the closest person that might be relevant to your thing, I think it is kind of a signal because they're basically saying like, I support you as a person, but I'm not willing to like risk my own network for that idea. And I think that's meaningful. The same thing with VCs, right? Like I value my portfolio company relationships. I'm not just going to throw any random company at my portfolio because like I'm invested. I don't want to waste their time. So the willingness to make portfolio introductions is like really meaningful. And we'll take two more. You have a question?
Yeah, I was just going to ask about a time between the intro meeting and second meeting. How long of a gap? How did you keep them engaged? Yeah.
Take to get to second meeting on average.
But the actual investors that converted like less than a week.
Yeah, just like this dead. Yeah, no, the same way. But also like then you're sending updates with traction with other folks coming off the round, reigniting. So it's just like default dead until you have some meaningful update and then everything's back in play.
The other thing I would say is don't be a taker of cadence, right? So you pitch somebody and ask them about their process and who they need to talk to and when can you meet? And like, I have a window to follow up on Friday because the reality is if you really wanted to do a deal, like when I was a first round capital, we used to have a, what did we call it? A firm priority, where if somebody hit the firm priority button, everybody on the investment team had to find their way to meeting with a company within 48 hours of somebody effectively like hitting the button. And like as a VC, you largely control your own schedule. Outside of like board meetings, you can pretty much make that time if you really needed to. And so for like certain companies that like already had term sheets or whatever, like if you call it a firm priority, like everybody could do that meeting. So most of the time, like we're setting schedules based on the founders that are like forcing our hand on it, right? That like it doesn't actually take a firm 6 weeks to make a decision. We just like let it draw out over 6 calendar weeks. But if you were like, hey, I don't want to spend more, I'm trying not to spend more than 3 weeks with any particular investor. Can you make a decision in 3 weeks? What might that look like? What does the cadence look like? Most people make a decision, at least for certainly a pre-seed round and probably a seed round as well. Last question, you had a question.
That's a delusion. I'd say like perverse enjoyment of getting punched in the face and enjoying proving people wrong and finding that motivating.
I think I just like, you're going to find a yes. You just have to find that person. I don't believe that I wouldn't find people to invest, which statistically it's really risky, I guess, but
To give a real answer, I would get on a client call
because your clients love you. And if your clients love you, they're paying you money that's equity free. I'll take your clients' money any day over investors. And hopefully they can write the checks that size, but that always kind of helped me get through knowing that we had something real.
I think the other thing I would say, because you said you're gonna find yes, I'm like, that's actually not true for the vast majority. Like I appreciate that sentiment, and I know that you believed that. And I think there are certain levels of honesty we have with ourselves, right? There are things that you hope will happen, and there are things where if you really turn the mirror on yourself, you know you've done the work to make it happen, right? That like you know the kind of feedback you're getting from customers, right? You know you're getting pulled into the market around something, right? I think the other thing, in my experience as a VC, just like in terms of like dealing with adversity, is in the VC space, we get invited on panels and speak at conferences, and everybody says like, oh, you know, we have the top VCs, and here's this like successful investor, and you wonder why VC egos get the way they are, but we're constantly being told that we're awesome. And then we go out and pitch, and we have to tell other investors like foundations, endowments, and family offices that we're awesome, right? So we just like constant like cycle. And then 90% of the companies that we invest in fail. And I think if I tied my identity up with the fact that I'm a good investor, I think I would like, it would mess with my sense of self, because most of the data says that I'm not until something pops, and then it does, right? So I just go through this sense of like, it is possible that I am not good at this. I am working hard. I am doing everything that I can find to like get better at it and all that sort of stuff. But I have to hold the possibility of like, this is not the thing that I'm best at. And I think that like too many founders don't acknowledge that that is a possibility, because then you're just like, there's nothing I can learn from this process. There's no data I can get back from this process. This is going to be it come hell or high water. And like most founders, like who are very successful, learn something about their market along the way, or learn something they were sort of, you know, wrong about, or misestimated, or things are going to take way longer, or the complexity of sort of stuff. And I think the better founders are the ones that are like learning. You have to feel like you know something when you start, and when you quit your job, and when you ask people for money. But then you also have to realize that actually you don't know nearly as much as you did, and be willing to learn along the way. I really appreciate everybody making the time to come out tonight, especially our founders. So if we can get a round of applause for them, especially because they're probably going to go back to work now. We really appreciate Bully Halag and Sunset, and the folks from Row for making this happen, and Fabric for hosting us in their wonderful space. Thanks everybody for coming out. Appreciate it.
Anyways, thank you for